Hello and welcome Forex traders. Steve here with tradingforexforprofit.com. Today is Wednesday, September 24th, 2014, and I am looking at the Aussie yen on the 1 hour time frame. I actually entered this trade last night before I went off to bed and forgot to record. However, I wanted to try to catch this before we hit the 2 times profit target so I could talk about a couple of things that are in fact important and that we can discuss on this particular trade. So what we have here is the inside break check pattern. Okay, so first we establish a level as we do with all of our patterns with a bounce. Okay, that establishes the level. We then return or revisit the level, and a signal forms that completes a pattern. In this case, we break out. That fails. We move back inside. It doesn't quite engulf this black candle with these two bodies, so therefore it's not a stop hit. Okay, it's an inside break. Check. Okay, so we break, we move back inside the break. That's where we get the inside break, and then the check, which is nothing more than the market attempting a move back in the direction of the breakout, which is what happens right here. We have this wick, we have a black candle, we have the wick attempting a move back down. It does close as a doji. However, the wick is what was important to me, and then the next candle closed higher. That's where I took my entry long. Okay, because I see this as a tapering off, a falling back to the breakout line, and then failure. All right, so I took the long. Now, here's what I want to talk about the most. Excuse me. I want to talk about the stop loss, okay, because we teach to put the stop loss 5 pips below the signal. In this case, if you're looking at this, this would have been a fine place to put your stop loss 5 pips below this doji, this wick that attempted to break out right in this area. You would have, in fact, already taken your 2 times profit. If you would have waited for this candle to close, which is the more conservative approach, because we move back and then there's the engulfing that engulfs all of these bodies, you would have set an entry for a pullback and targeted this area right here. You would have taken your pinning order right here on this candle somewhere. Okay, so if you would have taken the second chance entry, your stop loss would have also been below this candle. However, because I got in early, small candles, there's only 9 pips between the breakout line and here, I went ahead and put my stop 5 pips below this level here. And I did that because I was still able to maintain my 2 times profit target where? Beneath the zone. Okay, the zone is this bounce right here and this bounce right here. Okay, so the most recent highs, I drew the levels, and I want to target below this level right here. Okay, so as you can see, the market is moving up towards our 2 times profit. Hopefully that gets hit here shortly, but basically that's what I wanted to discuss with you. If you get an early entry, sometimes you can move your stop loss and have more of a conservative stop loss and still target the same level, opposed to getting in on the pullback, having the stop here, and having your 2 times profit up in this level higher. I was still able to be conservative here and take not as much risk. I could have withstood a move down a little bit more and still had a target beneath this level. Okay, our 2 times profit target was reached, and the market has pushed back into our target zone and is now falling off. That's why I wanted to wait just a bit before I recorded, so that I can show you what happens, and I can stress a couple of points that I would like to get across here. First point, okay, when you find your signal and your pattern completes itself, you look back to an area of logical resistance right here, support or resistance. Right here is some resistance along this level. Okay, this was a bounce point right here. It was a stall point here. It was a bounce point here. Okay, so that's a level, and then you want to find your most recent bounce high, swing high, okay, if you will, right here. Okay, so that's the zone. Okay, and the important thing to remember is that when you target this zone, you want to target, in this case, the bottom range of the zone, or below it if possible. Okay, why do we not target, just pick the most recent high and target that? Okay, here's why. There's a lot of times that the market never reaches that. Right here, see? Perfect example that it never reached this, it never broke through, tested. However, it did test the bottom range well up into the medium area, the medium range, okay, before falling off. Now, that's the first thing that I want to point out. That's why we target the outer range in our favor, closest to where we took the trade, the entry. Okay, this case would be the bottom right area, right in here. Now, second thing I want to point out is when you start with our system and you learn risk reward, we teach you 2 times profit, because if you can win one trade at 2 times profit, you can lose 2 more trades and be even. Okay, so you can win 1 and lose 2 and still be even. All right, if you start trading where you trail your stop and at 1 times profit you go to you put it back to the entry. Look what happened here. If we traded this right here, we would have put our stop when we hit the 1 times profit margin, we would have moved our stop up, possibly getting taken here. When we move to the 2, we move it up to the 1. Okay, look at where the market's headed now. They know where the stop loss orders are. They're moving down into this range. They move down into this range. They tried to take them for the trailing stop traders here. At this point, they move back down. They're taking them from the trailing stop traders here that are targeting this level. Okay, I'm sure that once the market moves down, takes these stop orders, we're going to see it push back up to this level. That's my guess. You never know. It could provide some type of a pattern down here and move down. Okay, that's why we don't speculate like that. We see the pattern form, we wait for the signal, and we make the trade with 2 times profit. Okay, target. And that's precisely why. Okay, so this is a perfect example of the inside break check, and whether you got in right here on this signal here, or you waited for the engulfing and you took a pullback. If you trade the engulfing right here, this bullish candle, typically what I would do is enter on a 50% retrace of something like that, maybe perhaps a little deeper. So I would have entered somewhere on this black candle, and still my target would have been at the bottom range of this zone. Okay?